FinTech is not just for banks. It is the fastest growing category of income systems for digital entrepreneurs. And most people are not using any of it.
In this video, we cover the specific FinTech workflows that generate income automatically. Yield on stablecoins, automated crypto arbitrage signals, payment routing optimization, invoice financing, and AI-powered portfolio rebalancing.
Each workflow is legal, documented, and already being used by thousands of digital operators worldwide. We show you how each one works, what tools run it, and what income range it produces.
FinTech income is income generated by making money work, not by trading your time. Your capital, your payment systems, or your data connections generate yield while you focus elsewhere.
The key distinction: FinTech workflows are not get-rich-quick schemes. They are yield-generating systems built on financial infrastructure. Like any income system, they require setup, monitoring, and risk management.
Workflow 1. Stablecoin yield. You hold a dollar-pegged stablecoin, USDC or USDT, in a DeFi protocol that pays you interest for providing liquidity to the platform.
The yield comes from borrowers who pay interest to borrow stablecoins for leverage or arbitrage. You are the lender. The protocol is the intermediary. Your principal stays in dollars.
Platforms, Aave, Compound, and Sky Protocol, formerly MakerDAO, are the most established. Current yield range, 3 to 12% annually depending on platform and market conditions.
The automation layer. You deposit once. The protocol compounds your yield automatically. Make.com monitors your position and alerts you if yield drops below your threshold or if a protocol risk event is flagged.
Workflow 2. Automated arbitrage signals. Price differences for the same asset exist across exchanges for seconds to minutes. Automated systems catch these differences and generate alerts or execute trades.
The two approaches: signal only, where you receive an alert and execute manually, or fully automated execution via a bot connected to exchange APIs. Signal only is lower risk and a better starting point.
Tools for signal systems. 3commas, Pionex, and CryptoHopper all offer signal-based automation with configurable risk parameters. You set the minimum spread percentage. The system alerts when the threshold is met.
Important context: arbitrage opportunities have compressed significantly as more bots enter the market. This workflow is most viable for people who understand exchange mechanics and are prepared to manage bot configurations actively.
Workflow 3. Payment, routing, optimization. If your digital business accepts payments, you are leaving money on the table with every transaction that goes through a single payment processor at maximum fee.
The workflow: connect multiple payment processors, Stripe, PayPal, and a crypto payment rail like Coinbase Commerce. Route each transaction through the lowest fee processor for that transaction type automatically.
The tools. Make.com reads the transaction type and amount, selects the optimal processor, and routes automatically. For a business doing $10,000 per month in transactions, this workflow typically saves $200 to $400 per month in fees.
That is $2,000 to $4,000 per year recovered from fees you were already paying, without changing your product, your price, or your customer experience.
Workflow 4. Invoice financing. If you issue invoices to clients with 30 to 60-day payment terms, you can sell those invoices to a financing platform and receive payment immediately, minus a small fee.
The mechanics: you issue an invoice for $5,000 due in 45 days. You upload it to a platform like Fundbox or Bluevine. They advance you 80 to 90% immediately. When the client pays, the balance minus the financing fee comes to you.
The automation layer. Accounting software like QuickBooks or Xero connects to the financing platform via API. When an invoice is issued above a threshold amount and payment terms exceed 30 days, the system auto-submits for financing without manual intervention.
The cost: financing fees are typically 1 to 3% of the invoice value. The benefit: you remove the cash flow gap entirely. Your business runs on real-time cash instead of 30 to 60-day delays.
Workflow 5. AI-powered portfolio rebalancing. You set target allocations across assets, equities, crypto, stablecoins, and cash. An AI system monitors your portfolio and rebalances automatically when allocations drift beyond your set threshold.
The tools. Wealthfront and Betterment offer automated rebalancing for traditional assets. For crypto portfolios, Shrimpy and CoinStats provide automated rebalancing across exchanges. All operate within rules you define.
The income mechanism. Rebalancing forces disciplined, buy low, sell high behavior automatically. You sell assets that have appreciated above your target allocation and buy assets that have fallen below. Over time, this systematically improves portfolio performance without emotional decision-making.
The AI layer. Some platforms now use AI to predict optimal rebalancing timing based on market volatility signals, tax efficiency, and transaction cost minimization, reducing drag while maintaining target allocations.
Here is how these 5 workflows combine. Stablecoin yield runs on idle capital. Payment routing runs on every transaction. Invoice financing runs on every large invoice. Portfolio rebalancing runs on your investment accounts. Arbitrage signals run when conditions are right.
The connective layer is Make.com. One dashboard monitors all 5 workflows. Alerts go to Slack or email when any workflow needs attention. Monthly reports generated automatically. Yield, savings, portfolio performance.
Combined income and savings potential for a digital business doing $10,000 to $50,000 per month in revenue with $50,000 in capital deployed.
Stablecoin yield on $50,000 at 8%, $330 per month. Payment routing savings, $200 to $400 per month. Invoice financing, $500 to $2,000 in recovered opportunity cost per month.
Portfolio rebalancing. Improved returns estimated at 1% to 3% annually. Arbitrage signals. Variable, not counted in baseline. Total system value, $1,000 to $3,000 per month in income and recovered costs.
Your starting point of this week. Do not implement all 5 at once. The payment routing workflow has the highest immediate ROI. It requires no capital and generates savings immediately.
This week, audit your current payment processing fees. Connect to Make.com. Add one alternative payment processor. Build the routing logic. Workflow 3 live in under 4 hours.
Which of the 5 FinTech workflows is most relevant to your business right now? Drop it in the comments. Stablecoin yield, arbitrage signals, payment routing, invoice financing, or portfolio rebalancing.
And if you want a live build session on any of these workflows, we build the full Make.com automation from zero. Tell us which one and we will make that the next video. Subscribe and hit the bell. The build is already in motion.